But let's bring on board and talk about some more numbers that we have, and that is coming from Marico. When you look at the numbers for Marico, they were inline set of numbers, but the management actually hiked in terms of an upward revision that came in from the margins. But to understand more in terms of numbers, let's bring on board Saugata Gupta, who's the MD and CEO at Marico this afternoon. A very good afternoon to you, sir, and thank you so much for joining in with us on ET Now. Let's talk about your domestic value. When you look at it, your overall revenue growth and overall domestic value growth also, when you see that's a decline of around 5% on a year-on-year basis, which is actually the lowest levels in 12 quarters for the company in terms of domestic value growth. What is it that one should be expecting from the company in terms of the outlook? Yes, this time there was a realization factor that came into play, but especially with Parachute also, there's a bit of a decline in volumes over there as well. So what should we be envisaging from the company in FY24 in terms of the growth going forward?
I think as we spoke about it in our earnings call, we had a significant deflation. As you know, last year, this was the quarter immediately after the Ukraine war had started, there was significant inflation. And therefore, if I look at a point to point, especially in Saffola, there was a 30% price reduction, which we took YOY versus last year when the pricing was at its peak. So I think this entire deflation factor will keep on gradually, reducing, and the anniversarization will happen. In addition to that, we have also got impacted, as you know, that there has been currency depreciation in some of our markets, in international markets, which again started sometime in the second half. So the anniversarization of that also will start and therefore neutralize that deflation factor that's happening. So the way we see it is that you will start getting revenue growths definitely in the second half, where the deflation gradually will move into maybe flat to slight inflation as we get into the second half of the year. Now, coming to Parachute, as we had indicated, it's a one-off, and we expect the reason it has been because of the fact that we are smoothing all the inputs across the year. Historically, we have had a far bigger Q1. We are trying to ensure that we try to have our secondary sales and primary sales in line with our overall offtake trends, and therefore the peak and troughs in trade inputs which we used to give, we have been gradually smoothing it out. That is good for working capital, that is good for long-term sales spend effectiveness, and therefore Parachute growth numbers are going to improve as we move towards quarter 2 to quarter 4.
Saugata, you're confident of achieving over 150 basis point margin improvement in the full year. I want to understand where exactly is this confidence coming from?
Combination of three things. One is obviously the input costs are far lower than what it was last year. We continue to have an aggressive cost management program in the organization. Our D2C brands compared to the other brands in the same space have far lower burn rates. Like, for example, whether it's Plix or Beardo compared to similar brands which are in the same space, our burn rates are far lower. As you know, that we go and select brands which I believe and the founders believe in sustainable, profitable growth. Also, the fact that one of the things we have been pushing this year is foods margin, as well as lowering of the reducing the burn rate in digital. So if you look at all this, despite the fact that there could be higher ad spends in the if you look at it interestingly, even in the last year when there was significant inflation, we never shied away from investing for the future. Our ad spends continue to increase, and therefore, even if we increase the ad spends a tad more in Q2 to Q4, we should be able to comfortably able to deliver 20% plus operating margin for the full year.
Right, and Mr. Saugata, what we are also understanding, what we want to know is in terms of the rural recovery. You had highlighted in Q4 also that slight bit of a recovery is at least what you're seeing. But right now seems like that's not the case for the company. Could you tell us the on-ground situation in terms of rural recovery for Marico? And is that gap between that rural and urban that we have seen actually narrowing down now?
I think obviously rural, the worst is over. There was some, as per Nielsen, some recovery, but as you know, that there is the reason why we said we are not seeing that much green shoots, but we have taken certain action that we will see and our volumes will improve, is that there is still a little bit of a, what I call downgrading and competitiveness at a bottom, competitive intensity from smaller players at the bottom of pyramid, which happened in the last quarter. Having said that, given that we have enough leeway in terms of margin, we have taken significant action in this quarter, and we believe therefore we'll be able to deliver better growth than what it happened in the last quarter.
Right. Saugata, which segment is there where you're seeing highest amount of competitive intensity?
I think it is, as I said, that overall, if you look at the FMCG category in rural, the smaller brands and the locals and others are a little more active because of the fact that, see, the inflation to a large extent has reduced, but at the same time, it still is there. And there is a tendency that consumers have sometimes to downgrade or titrate consumption of larger brands, and therefore it is extremely important to get the pricing right, or also invest behind micro marketing and other activities to drive demand generation. And I think large players today have the leeway in terms of the margins which are there because of lower input cost to invest behind it. And I'm sure that that rural growth which is we are seeing, that it will go mostly to the organized players as we move towards the Q2 to Q4.
And also just want to know in terms of overall your international business, that when you look at it, the double-digit growth is not there. It's around those levels, 9% in this year, in this quarter, I beg your pardon. But do you see it coming back to those mid-teen levels anytime in this year, or for the full year, could we expect that for the international business?
Double-digit growth is something which what we are aspiring for. As you know, a lot of countries in the international business obviously facing some economic headwinds, some currency headwinds. In spite of that, we have been extremely resilient in both delivering growth, and therefore, as long as we deliver double-digit growth, I think it will be a good performance. Secondly, what will also happen is that a significant amount of currency depreciation started as we move towards Q2, Q3, Q4. That anniversarization will start, and therefore the hit or the translation hit which we are getting, which impacts both revenue and profits in terms of the currency depreciation, that will tend to neutralize as we go to the second half.
All right, Saugata, thanks very much for joining us with that commentary on way forward. But Aditya Arora is